Hello, it's Tuesday the 11th. I'm FX Plu and this is the market brief. So the pound's getting pushed and pulled by two main forces at the moment. On one side we have Brexit and all the negative impacts of the risk that a no deal to that free trade deal, if no deal is reached by the end of the year. Yesterday Michael Gove fanned those flames by telling a conference that it will inevitably have border checks on EU goods entering the UK from January the 1st next year. Hardly inspiring to hear that so early in the process. Well played, Michael. Get back on the gear, maybe. On the flip side, we've seen some better than expected data released from the UK so far in 2020. That helps us move away from the rate cut expectations that dominated the turn of the year. That said, suggestions that UK confidence is growing should be taken with a pinch of salt. It's more now that that Brexit is progressing and the election is out of the way, and indeed that the Bank of England didn't cut rates. There's a little bit more confidence that economic Armageddon is not looming so large. Certainly it's not something to get too carried away with when yesterday's like-for-like retail sales data showed zero growth from December. Today we have manufacturing and industrial production data along with preliminary GDP. Missing forecast there could see sterling sold off further, as we saw 128.70 against the dollar yesterday. That's the lowest we've seen since the back end of November. Meanwhile, dollar gains have been driven by a number of positive influences. Trump survived his impeachment. Coronavirus continues to see the safe haven play support the dollar as market risk appetite remains reduced. And finally, last week's payroll data helped keep the dollar on the front foot and me slightly lighter of pocket in the sweepstake. Tomorrow we've got inflation data due out. CPI is not the Fed's favourite measure, but the market will be watching out to see if inflation is creeping up and if they can take that as an indicator of future Fed rate action. Euro dollar continues to be driven by dollar strength. We saw the lowest level since October at 109.08 yesterday. So bravo the dollar, keep that strength going. Right, that's it from me today. I'll see you again tomorrow. Have a great day.